Happy 4th of July, everyone. I'm Bag of Don at Stock Market Caddy, and today is July 4th. It's a Saturday. It's about 11:10, and we're in Tampa, and it is hot. It is hot. So I'm in my air-conditioned office, and I'm just reviewing some things for this past week. And I thought I'd go ahead and make a little short YouTube video on two markets that we described to our members of how we were going to approach them. And I want to show you what that trading looked like, and for the benefit of learning, I suppose. First thing is, let me explain to you what you're looking at. This is an ES futures contract. It's a 5-point Renko chart. This is the start of the week on Sunday night, the very start of the week, and then this is the entire week. We have our pivot information here, which, by the way, on Monday or Sunday night, things are going to be very, very tight. We expect either a breakout or a breakdown, most likely a breakdown. But as we were expecting down here, which we said to our members, we were expecting that this very well could have been the low for the week, and it turned out to be just that. But let me park a few of these indicators and share with you the strategy that we ran, and I want to talk to you about running strategies and trying to trade unemotionally. So let me turn off a few things as we get going. First thing is we're going to turn off, these are the pivot information that we provide our members. So let's turn that off. That leaves we have the daily pivot information that comes from the pivots. This is our swing points, and they've been really slowed down. And so you can see here we had significant support at the beginning of the week, and it turned out to be all week. And then when price breaks through the pivot, it turns into support. Notice we tried to break it, we rally back up, and then it holds, and we rally up, and we got another pivot point. But let's turn that off for a moment. I'm going to make this really simple. Now this is also some additional tools that monitor the necessary information on Bollinger's without having a Bollinger Band, but we're going to turn that off, and that leaves us with this. And what are we looking at? Well, this is not a MACD. This is not an indicator. This is actually the equity curve to the strategy. An equity curve. We started here. Now, what I wanted to remind everybody, no matter what kind of trader you are or trading you're doing, it is not possible to trade from peak to peak to peak. That is, without any little pullbacks. And some pullbacks are just little, and that's what we're trying to control. And some pullbacks could be really bad. Now, give you a for instance, if you had started, we have this strategy that's running here. If you had started the strategy right as the market opened, it wouldn't have done so well, because it actually started with a balance of approximately, let's look at it, $5,800, $5,800. And then it got all the way down to $2,300. So that's almost a $3,000 drawdown, right? But you were in some chop. Now, it's not to say that you couldn't have made money or you could have limited your losses. But did you get in this trade, though? So this trade went off right here, where the equity curve was at 2587. 2587. And as you can see, we run up, we pull back, we run up, we pull back. This is the equity, the money that you're making. This was the equity peak. And let's get a value on that. Let's see if we can get a value. $9,000. So from this point here, that would have been $7,500. But what I wanted to show and discuss with you is the mental toughness, the mental frankness with which you need to be able to trade. you need to understand that you cannot expect to go from peak to peak to peak. You could have some drawdowns in running any kind of strategy or even trading, period. And if you're trying to trade and have your account go from high to high to high to high, that is your dollar account, I think you're going to be sorely disappointed and become very emotional. But this is a beautiful strategy. And we described this strategy. This strategy, by the way, I'll share this with you. It was the edit strategy. It was our, bear with me, our SMC TPC long and short strategy. And it was set for what we call least sensitive. And much of the week, it was just long, all week. The other market that we ran, now this is pretty cool. This is the Russell. This is also the beginning of the week. Now look at this equity curve. This equity curve started at about 2,385. That's, if you started at 0, okay, you can subtract the math, 2,385. So it would have been about 700 some odd dollars for the week. And as you can see, though, it runs up, pulls back, runs up, so you can't get emotionally vested on every single trade, or you'll be a wet noodle by the end of the week. And once again, I'm going to turn off some of these, and I'm going to leave one on. But let's go to Edit Studies, and we're going to turn off the our pivot information. I'm even going to turn off the our swing points. We're going to turn that off. We're going to turn off the Bollinger information down below. That leaves us just the equity curve. This is our strategy. And oops, this is also do you like this? I'll give you a view of this. We'll pinch this down. We'll probably do a separate video on this. This is a very nice tool. This is kind of it plots for us. It's a kind of a linear regression channel. See that? Coming down, break, starting to come up. We can actually manipulate this data or this study. In case you don't see that, let me share with you this. Oop, bear with me. We'll edit study. But before I even do that, let's just bring this in. So this is the ending balance here at 3,000. Now we start each week, and I'm going to actually make a video for next week. I'm going to share with you the markets that I plan to, in any case, at least with our members, the markets that I'll be trading, the strategies that I'll be running. And my job is to get into these markets and to extract the profits and to, finish with a fairly healthy equity curve. But it's not going to start, I'm not going to start at 0 and go to 1,000 and then go to, 1,500 and 2,000 and 2,500 and 3,000 and 3,500 and 4,000 and 4,500 and, in increments and just go higher, 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 higher. I hope so, but not likely. Not likely. There'll be some setbacks. It's part of the game. It's so important, though, to get started right off the bat. But I want to show you something. This is really pretty cool that we have worked on. Bear with me. Okay, we're going to change the setting here on our little indicator. So if you can't see this, let me ask you if you see this. Look at that. Isn't that pretty? Isn't that pretty? Do you think you want to be shorting here? I don't think so. Do you see where the market's trying to do what? It's trying to go down. And then down we come, right? Probably don't want to be long. Actually, our strategy went short right in here. Then it's trying to pivot back up, runs into some problems. Isn't that a beautiful little tool? I'm Bag of Don at StockMarketCaddy.com. If you'd like to talk this weekend and get mechanical, get systematic in your trading. Because the last thing in the world you want to do is have a decent strategy. And if what you're doing is trading emotionally, even the strategy, look at how it's built. It's, it's got a beautiful equity curve. It's doing a fine job. But if you start trading it yourself and start trying to scalp it, if you're constantly buying when at a point where it's at its high, you could bastardize. You could turn a beautiful trending strategy into some sort of chop strategy, and we're trying to stay out of chop. So if you're emotionally tired from the market going up and down, I understand that. It's not the market's fault. It's just that you don't yet have your discipline ironed out in your thought process, and that's what we're about at Stock Market Caddy. Been there, done that. We're here to help you if you're interested. 813-758-8263.